if you co-sign for your parents or for a family or a friend on a house and you're wondering if it's worth it to stay on the loan so it could build your credit, the answer is, to me, no, because there's other ways of building your credit. You could go get a credit card. You could go buy a vehicle, right? And that's going to build your credit as well. And the reason why I don't recommend building your credit by co-signing for someone else on their home is because whenever you co-sign for somebody on anything, okay, like a house, a car, whatever it might be, student loans, what happens is that debt goes on your credit report. And now when you go try to buy, let's say, your own house, they're going to calculate that debt against you. They're going to compare your debt to your income to determine how much you're approved for. So now when you try to purchase your home, you might not even qualify, number one, because you co-signed for someone on their home, or number two, if you do qualify, it's going to be for a lot less. So let's say the bank says you're approved for $400,000, but you wanted a $500,000 house. Well, if you had not co-signed for your parents or family and friends on that home, then maybe you could have gotten approved for the amount that you wanted. So to answer your question, there's other ways of building your credit versus co-signing for a family or a friend on their home.